A very good evening to all. Respected speaker, CA Sanjeev Aditya M sir from Chennai. Respected moderator for the day, CA Ram Gopal Singhal ji. Respected co-opted member of Audit and Assurance Board ICAI from Jamshedpur branch, our beloved past chairman CA Ramakant Gupta sir. Respected committee members, respected past chairman of branch attending the webinar, respected senior members and my dear respected members. I, CA Sugam Saraiwala, Secretary Jamshedpur branch, takes this opportunity to welcome you all in this webinar on the theme Demystifying Assurance, and in this we are going to cover SA 230 audit documentation and SA 240 auditor's responsibility relating to fraud in an audit of financial statement. And we are blessed to have CA Sanjeev Anand sir from Chennai to enlighten us in this topic. Now, I would take the pleasure in welcoming the speaker for the evening. We are blessed that we have CA Sanjeev Aditya sir with us in this evening, and we all would be guided with his wisdom and knowledge going forward. It is delightful to have you here, sir. We all are looking forward for your tips and tricks so that we can carry on our practice with utmost ease and comfort. Now, I would request our branch chairman, CA Sanjay Goyal sir, to deliver his welcome address. Over to you, Sanjay Bhaiya.
Thank you, Sugam. A very good evening to all of you. Respected speaker of the day, CA Sanjeev Aditya M. Respected co-opted member of Audit and Assurance Board of ICAI, CA Ramakant Gupta ji. Respected moderator, CA Ram Gopal Singhal ji. Managing committee members, senior members, and all the participants and students. I take great pride in welcoming all the attendees on this VCM on standard of auditing. The speaker of this session is CA Sanjeev ji. I heartily welcome you, sir.
Thank you.
Friends, first of all, I give my gratitude to all the members and students for lively participation in CA Day program to make it a grand success. I give special thanks from the core of my heart to all the blood donors who donated their blood on the occasion of the CA Day. Now coming to the today's VCM, the quality of audit is the hallmark of our profession. And as of now, the Indian standard auditings are at par with the international standards. And to maintain our quality of audit, we have to follow all the standards in true letter and spirit. Now I conclude here with the words that auditor must approach their job with independence and skepticism. How do we instill those necessary traits in auditors? This may be the most important auditing question of our time. Thank you. Over to Sugam.
Thank you, Sanjay Bhaiya, for your kind and motivational words. Now I request CA Pankaj Shanghari to kindly introduce our speaker for the eve. Over to you, Pankaj ji. Pankaj ji, kindly unmute your audio.
Unmute karo. Thank you, Sugam. A very good evening to all of you. It's my pleasure to introduce our chief guest speaker of today's virtual CP meeting, Shri Sanjeev Aditya M. Ji. CA Sanjeev Aditya M. Ji is a practicing chartered accountant, holds a bachelor degree in commerce from Madras University. He is a fellow member of Institute. He holds a diploma in information system audit from ICAI and has completed the PQCC IFRS course conducted by ICAI. He is also an IBBI registered valuer. He is a speaker with ICAI and has spoken on various topics including audit standards, search and seizures, IT return, etc. I, CA Pankaj Shanghari, a warm welcome to our today's speaker in today's virtual CP meeting. Thank you. Over to Sugam.
Thank you, Pankaj Bhaiya. We, Jamshedpur branch, feels blessed to have you, sir, here with us. Now I welcome our moderator for the evening, CA Ram Gopal Singhal ji, and I request him to take the proceedings forward from here. Over to you, Ram Bhaiya.
Thank you, Sugam. Thank you. Good evening, everyone. I would like to thank CA Sanjay Goyal ji, Chairman Jamshedpur Chapter, CA Sugam Saraiwala, Secretary Jamshedpur Chapter, CA Yogesh Sharma, Sikasa, Chairman Jamshedpur Chapter, and other panelists who has attending this webinar and making this webinar a successful webinar. I'd also like to thank the member and other who has joined this webinar with a great enthusiasm. Today, our speaker, CA Sanjeev Aditya M, is a very renowned and eminent speaker and have a vast knowledge in the field of audit and assurance. Today, he will take us through SA 230, that is audit documentation, and SA 240, that is auditor's responsibility relating to fraud in an audit of financial statement. Both the topics are very important in today's world, as the business are becoming complex and regulatory reviews and actions have become the order of the day. In the first part of the webinar, our speaker will cover SA 230, and in the later part, he will cover SA 240. Audit documentation. Audit documentation can be understood as the pillar on which the entire building is built. That is, an auditor's opinion on the financial statement is based on the documentation that actually showcases the sufficient appropriate audit evidences being obtained and compliances with the auditing standard. It is not only important from the perspective of the compliances of various applicable legal and regulatory framework, but it also actually safeguards the auditor from any potential future litigations. You all knows, no country can grow without the transparent economy, and we as an auditor have given the responsibility to safeguard our economy. Reliance from stakeholders, owner, regulator, and public at a large again enhance our responsibility to the next level. Unless and until we are not able to justify our conclusion on our deliverables, we will not be able to gain the trust of the regulator, the stakeholder, and the public at large. So how can we justify our conclusion in our deliverables? That is through documentation. Having documentation of sufficient appropriate audit evidence being obtained up to the date of forming the basis of our opinion, having good and strong audit documentation will save ourselves from potential litigation. And by playing our part in the reporting of financial statement, which reflect true and fair view of the state of affair, result of operation and cash flow of the entity will also, this will also help, we are all, by doing so, we are also contributing in the nation building. We discussed the benefits of documentation. There are some macro level benefits are also there, like if we have a great documentation, it will enable the engagement team being accountable for their work they have performed, plan and perform the audit in an efficient manner, etc. So during this SA 230, we will cover various topics, various important topics, which include the requirement of documentation, the time and nature of documentation, documentation for specific high risk area like management estimate, significant matter, and significant judgment, documentation in specific circumstances like matter after the balance sheet report, etc. Our institute, ICI, has also understood the importance of documentation, hence taken a lot many initiatives to improve the quality of documentation, like arranging the webinars, providing the audit documentation tool at an affordable price to small and medium-sized practitioners. Our next topic, which we will cover in later part of the webinar, is auditor responsibility relating to fraud in an audit of financial statement. Here we will understand what is fraud and how it is different from error. We will also understand what factors should we consider while identifying and assessing the risk of material statement due to fraud. What kind of audit evidence should we obtain for risk of material statement due to fraud? How to respond the identified or suspected fraud? In next couple of hours, CA Sanjeev will take us through the guidance provided by SA 230 and SA 240 for documentation as well as the auditor responsibility toward fraud in audit of the financial statement. SA 240 for actually we have to be skeptical while we are performing the audit, and we have to assess the fraud risk at all stages of the audit. That includes planning, executing, concluding, and reporting. We will also tell, Mr. Sanjay will also tell about our responsibility during exceptional circumstances arose due to fraud, wherein the auditor is unable to continue the engagement, discontinued the engagement. We will also discuss if a fraud is identified, what are the responsibility of an auditor. So all this topic will be covered by CA Sanjeev in detail in next couple of hours. Without taking a lot of time of the participant, I would request Sugam to take it forward, and I also request Mr. Sanjeev to to further give the he can carry out his webinar on these topics.
Thank you, Ramya.
Okay.
Continue, please continue.
One more thing, this I request to the participant, कि if anyone has some doubt or some query, they can post in the dialog box which are appearing on their screen. We will take up the question and their questions in Q&A session at the end of the webinar.
Thank you, Ramya. Now, I will also request our co-opted member of Audit and Assurance Board ICAI, Ramakan Bia, to say one or two lines on the topic and about the experience or whatever. Over to you, Ramakan Bia.
Thank you, Sugam. आवाज आ रहा है ना?
एकदम पूरा आवाज है.
Thank you, Sugam. ये first time from Jamshedpur, a small town, I have been co-opted as a member of ASB, Accounting Standard Board. G. Sekhar, chairman, and Devasis Mitra, vice chairman. Recently, we have finalized, you all know, guidance on CARO 2020, and 1st July it is opened, submitted to all participants. So ये इतना हम लोग जैसे दिन हम लोग I have attended two meetings on this to finalize this CARO 2020, and we have to check every comma, every full stop, every comma function full stop, every word we have to verify whether it is correct or whether it is not correct. So it is taking much time, lot of effort by all the participants, all the members of the committee, and it is a wonderful experience I had in last two meetings. So ये जैसे SA 230, 240 है, ये जैसे audit evidence हम लोग बात करते हैं. अब जैसे मैंने एक आर्टिकल को पूछा, you know audit evidence, what is audit evidence, what is SA 230? She said, yeah, I know SA 230, we have to maintain audit evidence. When I asked her, you completed last year 2 audits, where is your audit file? So she said, no, I could not maintain proper file. So हम लोग पढ़ते तो हैं, लेकिन ये थोड़ा maintain करना पड़ेगा अभी, ठीक है, अभी जो time है इसमें थोड़ा ये difficult है, अभी इतना easily चलेगा नहीं. अभी Mr. Sanjeev will deliver his speech and he will clarify all the doubts. So over to Sanjeev. Thank you.
Thank you, Ramakan Bia. Now, without wasting much time, I would like to hand over the session to our speaker, Sanjeev Aditya ji. Over to you, Sanjeev sir.
Thank you, Sudham. Thank you, Mr. Sanjay Goel, Chairman of Jamshedpur branch, and the entire panelists today for giving me a chance today to speak to an audience. You know, COVID would have is doing a lot of bad things. All of us know that. One good thing is doing is giving us a chance to speak the other part of the country. And the vice versa. Now we're so used to that we speak a lot, do a lot of sessions down south in all the branches that are there. It's giving us a chance to speak to the other side of this huge country, a chance to see such other eminent people, eminent members who are there. So thank you, Mr. Sanjay, to reaching out to me and asking if I'm okay to do this session. So once again, a good evening to everyone who is attending this session. I'm not able to see everyone's face for obvious reasons. So, but I'm very happy that I'm here today doing this. Before we get into this whole essay 230, 240, this whole standards on auditing, I was very happy with the word demystifying assurance. I was just expecting very anxiously, okay, what is going to be the tagline they are going to put for today's session? I was very happy to see the word demystifying assurance. Now, we have senior members like Mr. Ramkant here and so many other senior members who are attending this. All of them will definitely advise us that yes, assurance is definitely a huge mystery. It is not as easy as the client, of course, and the world at large things. Assurance is a very difficult thing to do. Where we literally put everything at stake. More so in this COVID times. In COVID times, the primary fact that whether we will be even doing the audit is a mystery. Then if we go to the audit, whether the client will be working is a second mystery. If assuming he is working, whether he will be provide details to us is a third mystery. If we demystify this entire thing and ultimately complete the audit, whether we will get our fees is the biggest mystery of all. So these demystification I might not be able to do today, but with the limited capacity and limited experience that we have had here in the last decade, my last decade here as a professional, I would make a sincere attempt to demystify the cloud around this whole standards on auditing, documentation, fraud, etc. Before again going into the nuances of these standards, I would I'm very sure there are a lot of members, practicing members who are attending this session, as well as students who are going to be prospective practitioners in future. Something that I personally believe, and I'm very sure Mr. Ramkant Gupta, who is an co-opted member in the ASB, and various others members will accept that the amount of importance that as auditors, as practitioners, we give to various legislations, like say accounting standards, or say income tax, or say goods and service tax, the amount of importance that is given to these things is not given by us when it comes with compliance to the standards on auditing. Like say, I'll just put a very simple example for us all to relate it more easily. Assuming you go to an audit and you identify that the company has capitalized an asset, say for 50-60 crores. So immediately with all due diligence, we will say, no, sir, you need to identify different components in this fixed assets. There is this para 17 of, Ind AS 16, or say AS 10, which speaks about identifying separate components. Then we will say each component, you need to identify the useful rate separate because para 32 says so. Then you will say you need to identify the estimated useful life of this component separate. Then we will say under income tax that you need to, add for this, only then you will get depreciation. This has to be a capital revenue. We will say so many things, and given a chance, we will point out every last paragraph in the standard, every last line, every last interpretation in the income tax section. We will quote say 30-40 case laws behind everything and say what we are saying is right or what the client says is right. Understand that all that we are doing here is saving the financial statements of the company from being wrong. Or we are saying, sir, you please do all these things so that your financial statements is all correct. You will get depreciation properly. Your accounts will all be correct. Now, have we ever in our audit ever thought of this thing like, okay, we will go and tell the client that, see, sir, as per this auditing standard, as per para so and so, I am required to obtain these documents from you. We don't generally have the tendency of doing it. We assume that it is automatic. We assume that by ensuring that the financial statements are correct, our duty is over. It is very unfortunate that it is not so. And the entire members will accept, whoever are the panelists will accept that, be it the disciplinary committee, be it NAFRA, be it the investigating agencies like CBI, vigilance agencies in CVC, be it RBI, be it SEBI, whenever they are posting questions to us on the way we have done the audit, the questions are like this. So I have had a chance to be before most of it in this short span. The question is like this: Your guidance note on audit of banks asks you to do this. Have you done this? Your essay relating to identifying risk asks you to do this. Have you done this? How have you complied with your requirement to rely on the work of expert? Like say C&AG, I do a huge company where there are branches and branch auditors. And when there is an issue, C&AG asks, how did you comply in line with SA 600? So meaning when the questions are posted to us by these regulatory authorities, they don't ask you whether do you think the financial statement for this compliance is correct. If they ask us, then we'll give them 100-page submission. Say, so see, this para says this para says this, there is this accounting standard interpretation, there is this ITFCG clarification. We'll say so many things. But when any of these regulatory authorities are asking us a question as to whether have you done your work as per these standards, I'm very sorry to say, even in my own case, I'm not saying I'm perfect. Most of the members who are here will accept that we are never up to the mark to say that, yes, I have done this. This para says this, I have done this. We would have done a few things like say obtaining management representation letter, getting an audit engagement letter, getting confirmation of balances directly, like say 8 or 9 requirements, generally everyone does. But we should understand, just like an accounting standard has say some 30-40 paragraphs followed by say 400 paragraphs of this all this application guidance. Similarly, accounting standard also has a lot of paragraphs where it requires the chartered accountants to do a lot of things, and it is not the things at large but minute things also that you are required to do as per the auditing standards. But as auditors, are we ever doing it? If we put this question very sincerely to ourselves, we will, most of us will touch our heart and say no, at least internally. Maybe in the outside we may say, yeah, nahi, hum sab kar rahe hain. But internally, all of us know that the importance that we give to these auditing standards while conducting an audit is not 100%, while at the same time, the complaints with say income tax, GST, ESI, PF, payment of bonus act, this act, that act, the acts that you would have never known. Never, the industrial dispute tax is not something that we studied during CA. But as practitioners, we will quote everything from the Industrial Dispute Act to the factory and say, you have not done this, you have not done that. If we go back and see our own file and our own complaints of audit, all of us will know that we have never, been up to the mark in compliance with the auditing standards. Now, is it right? Is it right? No, sir. Ultimately, what, sir? Our requirement is to comment on the true and fairness of the financial statements. I have done it. I have commented on the true and fairness. I have done my work to some extent. I am a professional. I have a judgment in position. That is why I have done CA, having studied for 3 in some cases, 30 in some cases, and become a chartered accountant. Why is my judgment getting questioned? The unfortunate position is that, having said we are professionals, it is so obvious that each professional has a different mindset, different risk appetite, different skeptical attitude when it comes to auditing the financial statement. The world at large cannot go on like this saying, okay, Sanjeev does the audit in a different way. He has a different thought process. Mr. Sanjay Goyal has a different thought process. Mr. Ram Gopal has a different thought process. If Sanjeev says true and fair, let us accept. It cannot go on like this. There has to be some basic or some line on which everyone walks. So this line is definitely the standards on auditing. Even like most of them who are here, if senior members, like by senior, I'm not saying a lot senior also, there was an era where there was nothing like an standards on auditing. And there was a large medieval period where there was this AAS, auditing and assurance standards. And now I think in the last 13, 14 years, or little bit more than that, we are dealing with these SAs, standards on auditing. The evolution of these standards on auditing itself, or the way in which the standards on auditing are structured itself, will give us a bullseye idea that, boss, you are required to do this, please don't go beyond this. Say for example, essays, you see any essay, none of the essays are now big. Gone are the days where, auditing and assurance standards, when they were there, it has some 38, 39 paragraphs. Almost in every alternate paragraph, there will be the word as per the auditor's judgment, in the auditor's experience, based on what the auditor has identified. Gone are those days where the standards are worded like this. These days, the standards are very clear. The standard says the auditor is required to establish the risk, and he will say, refer para A14, which will take you to the application guide, where it says, how do you identify risk? and he gives you 18, 19 items. And if you read those 18, 19 items, you will understand that you actually cannot go beyond them. That will kind of become a restricted environment, or a very vastly restricted environment, or an exhaustive environment, where you will have to operate yourself while conducting the audit. It tells you, okay, do this, do this, do this, do this, expect this, expect this, expect this, expect this, take into consideration this, in such a manner that, tomorrow if a regulator or anyone asks, our position is very much saved to say, boss, see, I have done this standards on auditing. The standards on auditing has 50 pages. It has 140 paragraphs. I have verbatim complied with every paragraph in this standard, and none of these paragraphs in this standard is asking me to do this. So I'm not doing it. That's all. One of the current Central Council members, Mr. M.P. Vijay Kumar, in one meeting, he told a very nice catchy line. He made there was so many halabulla around this, fraud, etc., professional indemnity insurance, this, that, and all. Of course, I was a speaker in one of those meetings, like how Mr. Ram Gopal gave the introductory remark. He gave the introductory remark saying that, my dear chartered accountant professionals here, we'll forget the indemnity insurance. There is one insurance policy all of us will have to take is compliance with this auditing standards. So long as you are compliant with this auditing standards, no agency in this country or even the world can move you, because remember the line that we write in the audit report, these audit is performed in line with the standards on auditing, meaning I am not committing myself to anything that is there beyond the requirements of standards on auditing. So long as I have complied with the standards on auditing, no one can ask me a question anything beyond. Having physically been through this in certain circumstances, we have come out of those situations quoting that the CA Institute's guidance note does not require us to do it, and the authorities in those cases told in that case we cannot expect you to do it. Now this is the this is the rigor in which the authorities see the standards on auditing compliance on us. A huge credit to the entire CA Institute, the Auditing and Assurance Standard Board, and the entire Central Council members for putting their heart and soul in creating this kind of environment where literally, I don't remember, I have not got an answer to a doubt that I have had. We'll forget this expert advisory committee opinion, any new accounting situation comes. When it comes to auditing, when it comes to circumstances in relating to audit, I have personally in this last 10 years never come across a situation where I don't have an answer from the text. There is a detailed standards on auditing. In addition to this, so many documents in the form of guidance note. Say guidance note on audit of trust, guidance note on audit of banks, guidance note on internal audit of insurance companies, guidance note on internal audit, guidance note on concurrent audit, X, Y, Z, so many document after document after document. And having its base in standards on auditing, they envisage so many transactions, year-on-year updations in these guidance notes to ensure that the current trend comes into this guidance note, and people are not left haywire to say, what is this? This is not addressed. I think most of you will agree here that after 2000, I guess 15 or 16, for 2 or 3 years, the guidance note on audit of banks didn't come. And it literally created a lot of chaos in the chartered accountant saying, without this, how are we going to do the audit? Because that served as an absolute referencer for people to do the audit. And any guidance note you take, there is a detailed audit program. You take, there is a guidance note of audit of small entities itself. Understanding India as an environment, there is a guidance note on audit of small entities, which gives you a suggested audit program, which gives you suggested, SA checklist, which gives you a lot of ways in which you can do an audit to the small and medium enterprises. We'll forget this guidance note. You take almost every standard of auditing, there will be at least 4 or 5 paragraphs, which gives you a leeway to say, in case of smaller entities, how are you expected to do the audit? That is the level of sincerity, or that is the level of, thought process, that is the level of wide imagination that has gone into writing these standards on auditing. Like, people, Mr. Sanjay Goel, or like people who are in their 30s or 40s as practitioners will say, sir, they are writing in the standards on auditing, but the reality is absolutely different. Gone are those days where we can give this comment, because the standards on auditing are now addressing reality. Like they are speaking of companies where the director and those charged with governance are the same. Company where there are only 2 people who take absolutely every decision. companies where there is no actual internal control environment, how do you audit in that? Meaning, as an auditor, to safeguard our interest, to audit any kind of environment, there is a solution that is available for you in the standards on auditing. So, the standards on auditing, just like people who believe in, rituals, and just like people tell Bhagavad Gita serves as a referencer for you to conduct your life, the standards on auditing serves as an absolute referencer for you to forget conducting the audit. Conducting audit comes by experience, comes by the way you have been taught by your, your senior, your principal when you did your internship, by your senior when you are in an organization. The way in which you can safeguard yourself as an auditor, things that you are expected to look into are things that are absolutely elaborate in the standards on auditing. All that we are expected to do is take the standards on auditing, faithfully read every paragraph of it, faithfully understand every paragraph of it, and try to apply it. If I'm going to say the same thing to you for income tax, you people, no one will actually hesitate. हाँ sir, सही तो है, ऐसा ही तो करना है. We need to study everything in section 32 to know whether unabsorbed depreciation can be claimed or not. We need to study everything in 115 BAA to know whether it has to be applied to the company or not. When it comes to the accounts and preparation of accounts or auditing the accounts or tax returns, tax audit, we will be able to accept to read every year's Finance Act. We will be ready to accept to read the same accounting standards time and time again. We will be ready to follow absolutely every ITFCG that comes across. We will be ready to do everything. We will never hesitate to say, no, I studied Finance Act 18 when I did my CA. I'm not going to study Finance Act 20. We won't take the risk of doing it. Correct? Does anyone say, no, I studied Finance Act 1961. Why should I study this? We don't say that. When it comes to the core work, we are so obvious that, the thought process is so obvious that we need to know the current legislation. We need to comply with the legislation in letter and spirit. Why is that the same attitude does not come to us when it comes to, complying with the standards on auditing? I might be a bit harsh in saying this, but all of us will definitely accept that we are taking it for granted. We think we will be able to manage. We think it might not hit us. We think disciplinary committee might not take our case. We think NAFRA might not take our case. We think this might not happen. We think next year will come and we will escape. But when we are advising the client, we will say, sir, anytime they will take you for scrutiny. Sir, anytime MCA can take your accounts for scrutiny. We will kind of frighten them to comply properly. But when we have to comply with the standards on auditing, unfortunately, we ourselves take a lower stand and clients take an absolutely lower stand. We say confirmation ban, sir, agle saal de denge. We'll give it to you next year. I think principally the attitude towards compliance with standards on auditing is something that has to fundamentally change with all of us. Institute is doing huge work in ensuring that we people do it. So many webinars, and I think if I have to count numbers, this should be the 40th or 50th webinar, seminar on standards on auditing itself. So which means Institute is taking standards on auditing so seriously because they know that is what is the only life insurance that we have. So which means with earnest spirit, it is so important for all of us to follow the standards on auditing in letter and spirit and ensure that there is an absolute compliance with standard on auditing and not a nearby compliance. Fortunately for us, the standards on auditing itself will give you a nearby compliance. It will say, if you have done at least this, it is enough. There are so many standards. I can tell you, like say 30, 40 instances where standards will say, if you have not done this, at least do this. If not this, at least do this. If not any of it, ultimately a representation letter. So, they give you so many workarounds. It is just that, just like we love accounts, just like we love income tax, just like we are passionate about those legislations, we should now start becoming passionate about auditing standards and find out a way to comply with it. How many of you, I cannot see everyone's face here. How many of us have a technology in our office to file tax returns? Almost everyone, like Winman, Tax Sutra, this, that, so many technology. How many of us have an, best in class technology to do audit? Very less. Best in class technology to take care of ourselves? Very less. The maximum audit tool we have is Excel. And in that Excel also, most of us have a very primitive knowledge. We don't, Excel as an audit tool we do, but that as a safeguarding ourselves is very less. So meaning, the time has come where, the thought process now changes towards, boss, I need to save myself. Boss, I need to do all that is there on papers in the standards on auditing to take care of myself. Having done it for ourselves, it is a one-time exercise. It is a one-time exercise where you put in your mind, body, and soul efforts, to some extent financial investments, to ensure that you have a platform where you are pretty much saved of the harassment that could happen to you in future. Most of you who are following all these frauds, within the second day, in most cases the first day itself, irrespective of knowing the nature of the fraud, the name of the firm, name of the auditor, what was the auditor doing, A caps, everything caps, what was he doing, is the kind of questions that are coming. When this is the scenario, we cannot say as auditors we did our duty. What is your duty? What have you done? This says this, have you done? This says that, have you done it? No, this is the kind of gamut of requirement from a chartered account, practicing chartered accountant when it comes to compliance with standards and auditing. So all members who are into practice and all members who are into the industry who are assisting the practicing chartered accountants, please let us all take it with a real pinch of salt, that gone are those days where we say judgment. Now we are in an era where it is an absolute rule and law based compliance. So with this, brief, I would say barking, brief introduction of what I feel is the requirement of standards on auditing and how important a role it plays into the life of a practicing chartered accountant, we will get into today's topic. So today's topic, which has been given to me, is SA 230 and 240. SA 230, which is relating to documentation, and 240, which is relating to audit of fraud, consideration of fraud in audit of a financial statement. With the permission of chairman and the moderator, I would like to slightly inverse my topic. I would first deal with fraud, and then I will go into documentation to make things easier for all of us. So that fraud is something where not many of us would have practically come, but it is something all of us internally feel. Documentation is the call of the day. So it is that we have to do. I know, listening to auditing generally itself is very difficult. That too on a Saturday evening, listening to auditing is the most difficult thing of all. I will make my best efforts to, keep myself interested as much as possible for the next 1.5 hours. And I'll also make the best possible efforts to keep you all interested in the next 1.5 hours. Whatever questions you people have, in whatever mechanism the panel have decided, I will definitely address it towards the end. We have a presentation, so I'll cast my presentation on these two today. So is my presentation visible to all?
Yes, it is visible. Yes, it is visible.
Okay. So see, SA 240 is relating to responsibility of an auditor in connection with the fraud in the financial statement. Please don't expect these slides to keep moving and all. There is not much that I'll be speaking from these slides. I want to give an insight of what is a fraud primarily, and what an auditor is required to do in a fraud in the financial statement. Then I will take you through the presentation quickly. More importantly, at least today, let us make it a habit to open the standard and see how it looks. So I'll just open the standard and show the structure of the standard and what it discusses about. Fraud primarily in every audit, people who have done their internship from that day, it is something that your principal say, there would have been some fraud in the financial statement, please take care. Do your audit so that frauds are detected. Please take care, no fraud has happened so that we are not cheated. So, the fraud is something that continuously runs around. The thought process behind an auditor. Earlier, auditor's sole responsibility itself was to identify the fraud. Today, the thought process has changed, but nevertheless, people still think that we are expected to identify fraud. I will come to that a bit later. When it comes to fraud, while we are today seeing at fraud at a very, very complex environment where, people infiltrate the technology, there is people perpetrating from outside and doing something by which a fraud happens. There is at a larger level management override of controls. While people are thinking of these kind of frauds of the S2L date, I think Mr. Ramkant will appreciate frauds of those days where, we'll say creditor fraud, meaning people will get in collusion with the creditor to pass their bills early by getting a cut from them. These are standard frauds right from day one. Tender frauds, to give you a tender, some money they will take, those kind of frauds, and stock related common frauds, commission agent related frauds. The commission agent related frauds meaning like Sanjeev, like company will have policy only one commission agency per person. So I will open a commission agency in the name of Sanjeev Aditya, then Sanjeev M Aditya, then Sanjeev Aditya M, then Aditya M Sanjeev, 4 commission agents, and the company will be doing the business through all these 4 commission agents. These kind of frauds are still happening, meaning, it is not a scenario where, okay, till 2019, there were frauds of classification of A, B, C, and D. From 2020, there are going to be complex frauds. Understand? It is only a progression. Till yesterday, there were, say, 1,000 varieties of fraud. Today, it is going to become 1,001 variety of fraud, meaning with every new technology or new ways in which technologies are getting invented, parallel frauds are getting invented. In which way these inventions happen, the earlier ways of doing frauds will continue to exist and are continuing to exist, meaning our vocabulary when it comes to knowing what are all the kinds of frauds does not end with yesterday. It does not mean till yesterday you know, tomorrow you don't know, or tomorrow you know only tomorrow's and forget yesterday. It is not like that. Our vocabulary on what's happening and the kinds of frauds that are happening are so huge, are like, we can keep saying like 800, 900 different types of frauds that can actually happen in a financial statement, meaning in an operations which ultimately boils down to the financial statements. As an auditor, if you have to remember all this, it is virtually impossible for us to do this. But understand that in an audit of financial statement, by the way you conduct the audit, by the way you evaluate the risk, you can actually identify if these kinds of frauds have happened, or are there possibility that these kind of frauds can happen. I'll repeat it again. By the way we conduct the audit, by the way we do certain things in an audit, we can sometimes identify the fraud, or sometimes identify if there are chances that a fraud can happen. All that the CA Institute is expecting out of us is this all. What it says is, please do your audit in such a manner that you are able to identify frauds, if any, that can happen, or you are able to rest assured that a fraud would not have happened. If you are not able to do any of it, be at least rest assured that you have done all work within your scope that no fraud has happened. Meaning, in the way you have conducted the audit and the kind of informations, evidences, etc. that you have gathered, you feel that the financial statements are free of misstatements arising on account of fraud. This is what the CA Institute says. CA Institute does not say that, the standards warning does not say that, boss, your responsibility is to identify fraud. It says you have to do your audit in such a manner that the financial statements are free of misstatements from fraud. So this is the primary understanding that we need to drive, is that our responsibility here is not to identify fraud. Our responsibility is to conduct an audit in such a way that the financial statements are free of fraud. Financial statements, the risk of fraud affecting the financial statement is as minimum as possible. Like we do an analysis for the purpose of misstatement on account of other reasons, please give more importance for misstatements on account of fraud, is what the standards on auditing delivers to us. Now this entire SA 240 from end to end, it gives you an excellent guidance on how can you do it. What are all the things that you will have to do to reduce the level of risk of misstatement on account of fraud to an acceptable low level. Having done your work, based on the information and data you get, what are you required to do? Based on the work that you have executed, what is the kind of conclusions, what is the kind of summarizations, and what is the kind of documentations that you are required to maintain. This is all about this SA 240 in a very larger nutshell. If you have to see, without going further into the standard, we will take a small walkthrough, small and very simple walkthrough of what the standard says. By giving, I will try to give you a visual example of what is expected out of us when we are doing an audit by SA 240. Say I am doing an audit of, say, a company which is say 150, 200 crore in turnover. We'll assume it is unlisted, listed. We'll forget every other regulations that are there on earth. We'll for now focus what SA 240 is expecting out of it. The SA 240 says like this. Okay, Sanjeev, you are commencing your audit today. What is the composition of your team? See the composition of my team. See, I am the engagement partner. There is an audit manager in charge, and there is one qualified, and there are 3 or 4 apprentices who will be there in the audit team. Okay. Now, for the purpose of SA 240, what you are required to do is these things. Go and have a discussion with the management as to what is their perception. What it says is, I am expected to go inside the factory or the business premise, talk to the management and say, see sir, I have come to audit and commencing the audit from today. As you may be aware that financial statements, true and fair view is my responsibility, reporting on that is my responsibility. Any impact on account of fraud will affect this financial statement. So you please tell me your perception. You tell me your perception of the risk of fraud that can happen in these financial statements. Now that you are dealing with, say, example, we'll take petrochemical. Now that you are dealing with petrol and petrochemical industry, what do you think the kind of fraud that can happen in your company because of the product? Given that your company is having 240, 250 employees, given the fact that there are 10, 15 general managers, and there are 50, 60 assistant general managers, and a workforce and a contract labor, given the employee category, given the business combinations, what do you think as your perception of fraud that can happen? Do you think there are certain areas where fraud can happen? Do you think while valuing stock, the person, instead of putting the scale completely inside, will put the scale only 45% and say there is a stock loss, and he will take the extra stock and move? Do you think some fraud like this can happen? Do you think that some person is hiding something from you and because of that a fraud can happen? Do you think someone is constantly taking up the leave on Wednesday, so some fraud can happen? Do you think something is out of normal, that a fraud can happen? Do you think this person is again and again going to the United States and coming, so you feel something is out of order? What do you think are circumstances that have happened in the last 12 years, or the general geography or the anatomy of your company, which can lead you into the fraud? Do you think there are very sensitive areas in your company where a fraud can happen? A real example to this, which I personally came across in a company, a sizable fraud had happened. By the time we went there, the fraud was identified, the CBI case was, everything was done. When we had a discussion with the management, the managing director of the company, sir, how did you find out this fraud, sir? The fraud in that company happened something like this, okay? The company pays commissions. They pay commission for roughly 30, 40,000, I think 40,000 commission agents every month. This person, a lady in this case, what she has been doing is, for some 8 or 10 commission agents, in the rates, in the rates, the system rate master is configured up to 2 decimals. So what this person has been doing is, in the third decimal of the master, she will include 0.2, 0.2, 0.2 for some 5 or 6 agents, by which the commission that is paid is increased by 0.01. 0.01%. See the figure, it is 0.01%. The culmination of fraud has come into crores over the last 1 or 2 years. Okay, in the normal internal control environment, normal checking, no one can ever do. Think 40,000 commission agents. Do you think at 0.01 you can even identify this could have happened? Never. No, all practitioners here will accept, sir, impossible, sir, we cannot do. So I asked this managing director, sir, we ourselves have been doing this audit for quite some time now. We have never thought of this, sir. How did you even find? He said, Sanjeev, you don't take me otherwise. Don't arrive at any remarks on me. But the real way in which I identified it, this person is in my core team. She sits in this chair. This is where she sits. I myself find it very difficult to buy different things often. But this lady, every alternate week, she will change her handbag. 1 week Calvin Klein, 1 week Hugo Boss. She'll continuously change her handbag. She comes in a very flashy manner. Every fourth week, she will go to a holiday outside India. With the 20,000 rupees salary I give, I was always surprised as to how this was happening. I was technically envying her because I never was able to do it. Suddenly one day, I just incidentally put something to her, some question to her, for which the answer she gave made me feel that she has done this. That is how all this happened. So, sometimes or most of the times, the identification of fraud actually doesn't happen by way of an actual transaction audit, unless it is a forensic audit. It does not happen by actual verification of documents, because the reason I will tell you subsequently. It doesn't happen like that. Most of the cases, identification of fraud by the management itself or by any agencies is because of some silly mistake that person does, or by kind of these identifications. So, the standard says, Sanjeev, you go into the audit, talk to the management in depth, talk to them in depth on what is their perception that a fraud can happen in this financial statement. First thing, what is their perception of fraud? This is step one. Next, ask to them, what is it that you have done for fraud to not happen? Okay, sir, you are telling that there is a fraud, a possibility of fraud happening in stock valuation. What is it you have done to prevent this kind of fraud? Meaning, ask the management, what are all the risky areas of fraud that can happen in the audit. Then ask him, what is the control environment? Control environment, please read the inspective standard to understand the definition. What is the control environment that you have put in place to reduce the fraud that can happen on account of this? Understand it from him, so that he says, sir, this is one place where I cannot do anything. Cotton industry, what is the kind of thing that you have done to ensure fraud on account of fire accidents cannot happen? He cannot do anything. Cotton industry fraud is so obvious. All of you know, a mere glass panel and the sunlight coming out of it can create a fraud. Can create a fire. So, you cannot do much about preventing it. So, from the management, you are required to identify the areas where a fraud can happen, identify the controls that they are fixed. If there are areas where control is not fixed, what is to be done? I will deal separately. This is the first thing that the standard says. Then standard says, please don't stop with talking to the management. Please talk to those charged with governance, meaning the audit committee, meaning, audit committee in most cases, or the governing body of the company. Go and ask them. This word, those charged with governance, comes in almost every alternate page of this whole standards on auditing. They'll say, communicate with those charged with governance, do this, do that, because by presumption, it is assumed that those charged with governance ask these kind of questions already to the management, and they keep themselves rest assured that these things are not there. Meaning, the company to those charged with governance will say, sir, we are finding this kind of problem that is there, that is happening in this company. If this is something, they would tell those charged with governance, which they might not even tell the auditors. So you need to have a discussion with those charged with governance as to what is same set of questions. Sir, where do you think fraud can happen? Do you think management has done a right exercise to take care of the fraud? Is something you are expected to discuss with those charged with governance. Okay, you have discussed with management, you have discussed with those charged with governance. Please also go and discuss with the internal audit team, because they are the ones who are seeing the transactions day in and day out. They know in and out of this company. They know what is happening. So you please talk to them if they feel there are certain areas of fraud. You can now ask me, Sanjeev, why I need to do this? I am seeing the internal audit report now. The management is anyways giving me all the standard operating procedures. The audit committee is anyways giving it a letter of comfort. They are anyways giving me a management representation letter. Why should I go and talk to them? What is the whole importance? Understand something. When you talk to them, you will know a lot more than any of these written records. Say, for example, put it in a very funny way. In our audit report, we write something. Okay, we say we have done this management responsibilities. If I'm going to ask you now, so Mr. Ram, what all did you do in audit? You will tell me at least 10 times what is there in the audit report. You say, sir, audit report I have written very less. You know actually what has happened. You will tell me a whole lot stories of what all went into this audit. In a similar fashion, when you have discussions with the management, you can get to know a lot more things from them than what is actually there in papers. So you need to get those information. Now the next question is, Sanjeev, what is it I'm required to ask? Are things that are already mentioned in the standard. Ask to them as to what is their approach about risk in the company. What do they feel as sensitive areas? What do they think are as mitigating factors to take care fraud is not happening, or the fraud is prevented, or they are ensured there is no fraud environment? What is their appetite about fraud? What is the whistleblower policy? What is the insider, job rotation policy that they have? What is the key responsibility fixing they have? What is the alternate verification mechanism they have? Do these kind of conversations with them. Having done all this, in addition to this, please talk to your engagement team. They are everything, because engagement team is someone who deal with them day in and day out. We come as partners on the field for 2 or 3 days in a year and take care of the final review and close. In some cases, we might be there for 10-15 days, but it is with the engagement team that the accounts team, the lowest person in the accounts, interacts. It is engagement team with which the security himself interacts. Security will say, bhaiya, it is with the engagement team that the security of the company talks, and it is with the engagement team that everyone talks. An engagement team, because of the amount of time that they additionally spend there, they definitely know more than you, because they get something called gossip into their ears. They get something called rumors into their ears, and these gossips and rumors gives you an edge in doing an audit of financial statement. They might tell you that, sir, something like this has happened, please take care. Okay. So this something is something that will put something in your mind to do something. Now, what is this something about is what is the next part of the standard? Having done all this, what is it you are required to do? Based on your initial discussions and based on various documents that you have gone through initially, you are, with your professional skepticism, required to do something. Now, what is meant by professional skepticism? This is what this standard predominantly is all about. This standard predominantly tells you how are you expected to be skeptical. Having been skeptical, what are you required to do? That is what this standard is more so about. Now, what is skeptical? Skeptical, really, I have tried to give explanations about skepticism by language so many times, but it is something I have never been successfully able to do. Skepticism, he says, keep your eyes, ears, and mouth always open. Think of the negative can happen always. Be more watchful. These are things that we cannot put it into action. I would rather give some example to say what is skepticism is about. You can draw these examples as parallels, and then maybe in a larger picture you can think what skepticism is about. I will just put this one example here. Okay, in the same pharmaceutical company, when I go into the when I go for the initial discussion, I go to the managing director and I talk to him. हाँ सर कैसे हैं आप सर क्या हाल है क्या अच्छे चल रहे हैं सब कुछ ठीक है? How was the business last year? How did things go? Everything I'm asking. Then I'm saying, sir, what is the status of the accounts of the company? He says, sir, there will be some hiccups. The CFO left on 25th of March, so you might have some problem. You say, oh, okay, sir, CFO left on 25th. Oh, that is very unfortunate. Why did he leave, sir? Yeah, no, crazy beggar. He यहाँ का salary कम है उसको, तो उसने कोई और चल गया. His salary is very less, so he wanted to leave the company. So I also said, okay, might as well you leave. There is no problem. So then I asked him, no problem, sir. Anyway, Mr. Guru is there. He is the second in line. He only knows more about the accounts. So I will take care of it. No, sir, actually Guru has also left it. He left on 22nd of March itself. Some personal problem. Guru has also left, sir. Oh, very unfortunate. There is one Mr. Ganesh who is next in line. No, sir, Ganesh is also on some kind of sabbatical. He will also not come to office. Oh, okay. That's very unfortunate. But in operations, there was one Samrat. No, sir, that operations guy is also not there. No, when I'm listening to all this, normally what we'll see sympathy and empathy for the company. At Timmy, so many people have lost, and there is then sympathy or empathy on us. Oh my God, so many key people have gone. How will I do the audit? This is the normal attitude. Now, what is skepticism is? It says the standard, in fact, gives whatever I'm saying as an example itself. Key retirement towards closure of the year is the example for this. What skepticism is? I am expected to know what could be a fraud related reason for these people to have gone, out. Okay, that is what is skepticism. say in this example, if I have to put one more parameter to say, okay, the company is in an environment where if the sales crosses 250 crores, okay, sales crosses 250 crores, they are eligible for a rebate from the, they are eligible for a rebate on GST from the government, assuming they are in an environment like this, and the company's turnover is 230 crores. Now the managing director of the company can get a rebate of roughly 30-40 crores, and the company is a 240 crore company. Just 10 crores is the difference. Just 10 crores is the difference to reach that threshold point, and you observe so many key people leaving, and in the financials you observe that the turnover is 260 crores. The company has crossed 250 crores. What skepticism says is, expect that the managing director had wanted the CFO and the guys to overstate the revenue, and hence they have left. You understand? This is what is skepticism. Skepticism says, when an abnormal incident happens in the company, expect or think of some scenarios relating to fraudulent activity which could have allowed these events to happen. Assuming the managing director says, sir, a fire had happened on 31st December, is something he says. Normally we will say, oh, that's very unfortunate. I also saw the news a fire has happened. But skepticism says, did this, this fire happen solely for the purpose of getting the insurance claim? Was there a sabotage? Did something happen for the purpose of something? Is what is skepticism. Okay. Now, Sanjeev, how do you think I can be so doubtful about every incident that is happening? Yes, very true. You cannot be skeptical at every word of what he says. Sanjeev CFO left. The moment he says, if that's it, that means some fraud has happened. This is not the skepticism. This is very bad. This is not something we are expected to do. But when a series of events or a combination of various things can give you a doubt, then bring the skeptical thought into picture. Rather, have a skepticism open always. Put doubt inside the skepticism when so many things comes into picture. This is what is the first part of the standard, which says identifying the risk. Identifying the risk happens like this only. Identifying the risk means by various discussions and by getting various informations, and with the thought of professional skepticism, I need to see if there is any risk. You get, I think you are able to reach this point where we are going. Now, additionally, Sanjeev, this is one professional skepticism. What other things I am required to do is, with these discussions, plus you are required to see various other things. Various other things is a huge gamut of things. He uses a simple line saying risk identification factors. Risk identification factors as a separate appendix which runs to 6 pages, roughly 140 line items to say these are the risk identification factors, which includes things like this: people retiring towards the year end, incentive to the management to increase the sales, incentive to the employees to increase the sales, by which the profit that they earn will be higher, incentive to the employees to support the management to do the fraud, management override of controls that exist. Things like these, if they are there, these are assumed to be risk identification factors. This is what is the core part of the standard. As I told you earlier, the standard does not want you to identify fraud. It wants you to be like this. The second thing you are going to ask me, Sanjeev, if you are doing all this, might as well you'll find the fraud itself. Sanjeev, if you are being so skeptical, if you are identifying every damn risk that is there in the company, might as well I'll find the fraud itself. That is the, that is maybe the ultimate thought process, I would say. Ultimate thought process would be, by being so judicious or so cautious in which you will want to do the audit, you identify or ultimately end up identifying the fraud itself. This is the first part of the standard. Okay, now slowly getting into the next part, of the standard, he says, now Sanjeev, you went into the company, you did discussion with the management, you had your professional skepticism, and you think there are certain areas where fraud can happen. You have observed that a fraud can happen in receivables, a fraud can happen in the cash and bank, a fraud can happen in this area, then what you have to do is you need to react, correct? Any action has a reaction. Now that you know that a fraud is possible in this financial statement, either at the entity level or at the assertion level, please understand these terms very nicely. The entity level is at large, assertion level means individual asset class or individual account balance level, there could be a fraud. If by your initial exercise you get to know that there could be a risk of fraud in these environments, what you are next expected to do is plan your audit in such fashion that the misstatement on account of these risks that you have seen is reduced. As simple as that. He says plan your audit by increasing the extent of verification in those areas, increasing or adapting to alternate means in those areas, increasing the element of surprise checks in those areas, increasing the element of uncertain verification in those areas, by which you eliminate the extent of risk. Idella overhead. These are overhead. We cannot understand it like this. We'll again take a very nice example. In our same example, where this 240 crores to 250 crores fraud, he has overstated as 250, 260. I cannot go and catch hold of the managing director and say, sir, you tell me it is only for this GST rebate you have increased the sales. No, that is why these employees have gone. Am I right? You cannot do this. No, you need to devise your audit in such a way that you eliminate the risk on account of this fraud. Now, as examples, the standard says increase the extent of verification, meaning the extent of verification on your cutoff procedures, you please increase. Like the year-end sales, normally we will do a cutoff procedure. We will take the last sales, we will get the balance confirmation from the company. We will ensure if that is the same balance that is there. These are the usual cutoff procedures that we will do. Standard says, in fact, the example that I'm saying is there in the standard itself. Standard says if you come across this scenario, in addition to your usual cutoff procedure, what you do is you write to the external party and ask if he has received these materials before the end of the year. Ask him if he has received these materials before the end of the year. Leave alone a balance confirmation. Tell the invoice numbers and ask him whether he has received the goods, and ask him whether these goods have been accepted. Ask him properly, invoice wise, item wise, rather than asking at large. Okay, one example. Another example, if you feel in treasury operations or the cash and bank side there could be frauds, instead of just stopping with these direct bank confirmations, relying on those things alone, go beyond and do an additional work by say I will want to do a test check this morning, and don't go on that day. Go 4 days thereafter and see what is happening there. Do a process walkthrough of a current transaction. Do a process walkthrough of what happened earlier year and the current transaction and see if there is any change. See if you can do anything additional by reducing your risk. If your normal sample is if your normal performance materiality or the planning materiality is 10 lakhs, for these areas have your performance materiality as 1.5 lakhs, or make the performance materiality itself as 0, so that you do an 100% verification. So standard says, based on your understanding of the risk profile in terms of fraud of the company, do additional audit procedures, plan your audit in such a way that the risk comes to a very low level. I think you people are able to make out this picture up to this extent. Please, see, whatever I'm saying is hardly 2% of the standard. If you read the standard, you'll get so many more examples, so many more understandings and thought process behind this. Now, the next part of the standard is very simple. It says, having done this, having done your planning, and having ensured that you have covered the areas properly, that the risk of fraud has substantially gone down in your audit. If you come across fraud A, if you don't come across fraud B, if you come across fraud, what you have to do is you need to report to those charged with, for primarily the management, and then those charged with governance on what is it that they are going to do about this fraud is something that you are expected to ask. If they are saying, oh my God, this fraud has happened, this is the immediate activity that I'm going to take. This activity will be taken and the impact in the financial statements will be given like this. Say for example, the fraud is something like this, like say creditor fraud. I have been taking money from the creditors and I have been booking wrong bills in the financial statement and I have identified this fraud. The likely action is expected to be that the entire expenses are to be reversed, meaning the expenses are to be reversed. Then a receivable from the perpetrated employee has to be accounted, and then a corresponding provision for bad and doubtful debts has to be done. We need to see if the management has taken adequate action by filing an FIR. If they have not filed an FIR, what is the reason? Again, skepticism. If they have not filed an FIR and they have just said, sir, okay, sir, I'll get the money from him and we will leave him, then skepticism. Why is it they are leaving him? Is this management also involved in it? Is the magnitude of fraud very small as compared to what I am seeing? Skepticism again. So putting this route again, seeing what the company has done for him, then reflecting properly. If it is reflected properly in the financial statement, primary responsibility is over. Then comes the reporting. That will come separately. Okay. In this point, now what I have done is fraud is identified. I have told to the company, or in some cases those charged with governance, identified what is going to be their reaction, and based on their reaction in the financial statement and the impact that they are expected to give, and the outside financial statements actions that they are expected to take, everything that they are taking. Second scenario, I go and tell him that there is fraud. He says there is no fraud. He says, no, this is a normal thing only, there is no fraud. Then what I am required to do? There comes the question of whether I can withdraw from the engagement, whether I can give a modified opinion. Depending on the position in which you are, you can withdraw from the engagement. But most likely thing that you are expected to do is report on the fraud. Now internally question you people are saying, Sanjeev, the fraud itself is done by management. If I am going to report in the financial statement, I might as well not be alive the next day, they will murder me. We know that this risk is there. It is so, this is the fact. We can do our activities by reporting to authorities, which I will come a bit later. We are expected to, as per the standard, report on the fraud in the financial statement as in by a modified report, then or withdraw from the engagement. Now second level, with this as a scenario, what is my reporting requirement? That reporting requirement is where, unlike so many other things, as far as fraud is concerned, there are some legal obligations itself. This legal obligation, primarily, if it is a fraud that you have identified, remember, you have identified, and if it is more than 1 crore rupees, you are expected to report it to the Ministry of Corporate Affairs or the RD in some cases on the fraud that has happened as per 143.12, and there is a separate guidance note of the institute, guidance note on reporting under 143.12, where they deal in detail as to what you are expected to do, where they have very clearly told that the reporting will come only when the fraud is identified by you and not when the fraud is already identified by them. This is the primary outside reporting. Then secondly comes under the CARO, there is a requirement for you to report on the fraud that has happened. Normally the most suggested way to reporting on fraud is make company give an emphasis of, make company give a note in the financial statement. Then you draw emphasis in your financial statement and also give a reporting in the CARO, so that understand, all of you will very clearly know your reporting in CARO does not leverage your fact of reporting on the true and fairness of the financial statement. You understand? Just because you have reported in the CARO that there is a fraud has happened doesn't mean that your financial statements you are saying true and fair is correct. Your reporting on the financial statement and true and fair view is an independent thing of CARO. CARO is a specific requirement under the Companies Act. This independent report is a separate thing. So which means you have to report on the true and fair view, considering either an EOM, emphasis of matter paragraph, or in some cases a qualified report, plus a reporting under the CARO where you are expected to report on the fraud. Understand, when you are reporting on the fraud, you need to report on the kind of fraud, whether it is misappropriation of funds, embezzlement of funds, or fraud on the company, fraud by the company, fraud by the employee. Who has done the fraud is something that you are expected to report. And the core reporting in EOM, depending on the intensity and materiality, of course, you need to do that. Plus, remember very carefully or listen very carefully. In addition to all this, please do not forget that you may have an obligation to report in the IFCR also, Internal Financial Control also. Remember, we are saying that there is a control that exists, and all those controls are operating effectively. Sometimes there are chances that the whole fraud happened because of the control not existing or operating ineffectiveness of the control. When either of these two scenarios have led to the fraud, then it is the auditor's primary obligation to report in IFC that this is there. Please don't divulge from reporting this. Now, the next argument that you can take is, Sanjeev, the standard says the requirement is to report as at 31st March. So, assuming the fraud has happened during the year, and as at 31st of March, they have put in controls and it is all absolute, I may not have to report. If this is the argument you are taking, please understand the nature of fraud is such that it can definitely not end with something. It is not a day where fraud happens and you identify it close. The fraud can go further deep rooted into various other transactions which you cannot identify in a year. Say for example, for a moment, we will take the PNB fraud. All of you know that the PNB fraud came into light in 1 year, and the genesis of it went into 7 years. Am I right? It went into 7 years, and it might have gone into future years also, which we don't know. So, which means when you are reporting on the IFC, please don't take a stand that as of 31st March, nothing is there, so I won't report. This is not at all the thought process. The thought process should be that fraud is something which is beyond my control, which is with an intentional act. So please make a note in your IFC suitably to say that this has happened. This is the current position. You please make that report, and without making that report, we are putting ourselves to risk. The entire 3 things which I told now is out of practical experience. Where the question was before agency, we of course came on. That's a different thing, but it is out of practical experiences only. This is what is our requirement at large. Then to save myself, there is a para relating to documentations on the SA 240. Everything that I told from first, everything that I have been shouting for the last 40 or 45 minutes on, you have to go and have a discussion with them. You have to go and discuss with those charged with governance. You have to discuss with your, with your team. You need to discuss with the internal audit. Then you need to plan your audit. Then you need to report. Then you need to collect evidences. Everything that I told are to be documented. Remember everything. Next, when I'm going to deal with SA 230, I'll be dealing further on what is this concept of everything. But you are expected to document every damn thing that I have been speaking thus far. Okay, this is what this standard is all about. Now, when I dealt with this standard at large, I didn't deal with certain things which are very, which are things which we already know, like what is the definition of fraud, what is a fraud that can happen on account of management override of controls. These are things I didn't intentionally deal because of the paucity of time. These are things with this as a background, with whatever I told as a background. If you go back and read the standard, which I assume everyone will do, you will understand the things further. Now, in course of all this, there is one para in the standard which catches my eye every time I go through is this. As far as revenue is concerned, as far as revenue in a financial statement is concerned, have a rebuttable presumption that there is fraud. Sanjeev, what is this? I gone to the management, I spoke to the internal audit team, I spoke to the, I spoke to the watchman, I spoke to everyone. I didn't get a risk in the revenue. Standard says, as far as revenue is concerned, always assume that there is a problem with fraud. There is a chance that there is a misstatement on account of fraud because paisa. Revenue is what is paisa, and when there is money, there is an inclination to do fraud. This is what this standard is all about. So I will now take you all through the presentation with whatever I told as a base. Incidentally, if I have left out something, I will highlight. You can also have an understanding of what we spoke thus far. So primarily comes the definition where it discusses about fraud being an intentional act by one of you individuals or those charged with governance or by third parties on the company. As compared to error, which is an unintentional act, fraud is something that is intentional. Now, fraud risk factors are things that I told, things that you are expected to do by way of your skepticism, or in some cases, easier way is to go through this list and see if any of these things exist. By definition, it just means events or conditions which give a thought process that a fraud has happened, or events or condition which gives an incentive or a pressure to commit fraud. In some cases, the event in itself will be the pressure. Some cases, the event will give rise to the pressure. Both of these are fraud risk factors. Then characteristics of fraud: misstatement from fraudulent misreporting, misstatements resulting from misappropriation of assets. Slightly further, I will tell you what this is, slightly further into the PPT. Then responsibility of prevention and detection of fraud. The primary responsibility of prevention and detection lies with the management. All that as an auditor I am required to do is to reduce the impact of misstatement on account of fraud to the acceptably low level. I should eliminate the risk that the misstatement could be on account of fraud to a possibly low level. If it is high, appoint certain audit practices by which the ultimate execution makes it low. Objective of this standard is identify and assess the risk of material misstatement, then obtain sufficient appropriate audit evidence about the assessed risk of material misstatement due to fraud to design and implementing appropriate response, and respond appropriately to identified or suspected fraud. Then the requirements of an auditor, like what I told you, professional skepticism throughout the audit and not only on the day one. Have a professional skepticism throughout the audit. Then discuss among your engagement team. Conduct the risk assessment procedures and related activities, like making inquiries with the management, making inquiries with the internal audit function, making inquiries to those charged with governance, identify unusual and expected relationships, then other informations. Now this identify unusual and expected relationship is something I didn't deal. Okay, is this something that it goes something like this? Through your analytical review, through your variance analysis, through various other things, you can identify fraud. Say for example, now during this corona time, during this COVID time, newspapers, they hardly have advertisements, correct? All that is there in a newspaper today is page 1, yesterday's corona count, page 2, possibility of tomorrow's corona count, page 3, what happened to day before yesterday's corona count, page 4, how many celebrities lost life on account of corona, page 5, what is government doing for corona, page 6, what you can do for corona. Meaning end to end in a newspaper today is only about corona in various combinations. If nothing is there, there are 15 or 20 different types of masks that are coming in the paper, which means there is no advertisement today. Today, now you are going to do an audit of a company which publishes, say, newspapers, and you observe that there is a huge advertisement revenue in the last week of March. Something is a problem then. There cannot be an advertisement revenue in the last week of March because there is corona. Now, this is what is analytical review. Okay, considering the circumstances, considering the scenario, there is a huge, huge revenue. By your review, you observe it is not possible. Another possibility could be, for normally the debtor turnover ratio or the creditor turnover ratio is say bi-monthly. But except for few debtors alone, the creditor's turnover ratio is say 2 days only, which means there is some problem. Debtor turnover ratio normally it is 1 month. For one debtor alone, the credit period has always been 7 months, and there has always been huge discount that has been given. This comes out through the analytical review. By this and with a skeptical thought process in identifying these unusual and unexpected relationships, you can do it. Okay. Then other information comes these people who left closer to the end of the financial year. You observe that the fire has happened in the year end. You observe that the same employee has gone out and come inside. You observe that one employee, even if he doesn't want to go out, the management is not leaving him outside. You observe that, the management is the one who prepares the check. I mean, the same person prepares the check, same person receives the purchase order, same person passes the bill, same person does the physical inspection, and same person is incidentally the managing director of the company. Then, which means there is an absolute management override of control. These all comes as a part of the other information that you gather. Then once auditor identifies, does his work in the risk assessment, he need to assign and supervise personnel taking significant engagement responsibilities, evaluate accounting policies to be evaluating the accounting policies, which are inconsistent or which might lead into fraudulent financial reporting. Like say, for example, for the purpose of, to reduce the profits this year, the company will say, okay, let us do one thing. In the actual valuation, instead of putting the escalation rate as 2%, let me put the escalation rate as 12%, by which the provision for gratuity will increase, by which the profits of the company will reduce, by which I don't have to pay bonus. You understand? Now, this is the fraud that is inherent in the accounting policy or the accounting design of the company, where by way of this escalation rate is creating a fraud. Then incorporate audit procedures to include an element of predictability, which is whatever I told. Then presume, rebuttable presumption that revenue always has fraud. Then auditor responds to risk related to management overhead of control, which means when there is management overhead of control in the company and certain class of assets and liabilities, income and expenditure, test the appropriate journal entries, review and evaluate accounting estimates for many biases, evaluate business rationale, perform any other audit procedure. Then get a management representation specifically mentioning these things. Responsibility of design and implementation is that of the management to prevent internal and create an internal control to prevent fraud. Disclose the result, and he has disclosed the result of assessment of risk of material misstatement to the auditor. Disclose the frauds that have occurred or suspected involvement of management and employees. Disclose any other allegation of fraud that has come in during the year. Is something you need to specifically get in the management representation letter. Then on the identification of fraud or suspecting a fraud, you need to report to the appropriate level of management, in some cases to those charged with governance. Then determine the information about the fraud has to be communicated to party outside the entity, in some cases an FIR to the police, in some cases to the Ministry of Corporate Affairs. In case of banks, there is a requirement by RBI to report to the Reserve Bank of India also. So see what is your requirements there. This is 143.112 requirement and master direction of frauds by RBI, where he is saying the auditor is required to report. Then document significant decisions taken with respect to susceptibility of fraud based on a risk assessment procedure, identifying the assessed risk of material misstatement at the financial statement level and at the assertion level, which means individually, overall response that has been designed to the assessed risk, audit procedures and conclusion that have been arrived, to document communications made with the management, which means everything right from day one. This is what SA 240 is all about. So I guess with the initial story that you adapted and with this PPT, you could make a very broad understanding of 240. Quickly for a minute, I will show how SA 240 looks. Mainly it is a 50-page standard. If you see the actual standard will end with page 14 or 15 if my memory is right, beyond which the application guide comes into picture. And if you see the application guide, you will observe that so many, with page 13 the application guide starts. The application guide is for the rest 40 pages, which means for 40 pages the institute and the AASB has written very elaborately as to what you can expect in each and every phase. Even in this, I just want to quickly take you to the very last part of this standard, okay, which is this. There is an appendix 3, examples and circumstances that indicate the possibility of fraud. Meaning, this whole susceptibility, risk factor, the institute doesn't even want to pressurize you in that. It says, boss, minimum do this. See, he is saying so many instances which could be assumed to be a reason for fraud. If we at least faithfully go through this and apply in our audit, we are safe. So this is what I said by applying the auditing standard in letter and spirit when it comes to audit. I really don't have time to go through this entire thing. Normally SA 240 is a standard which I want to take for 2.5 or 3 hours to give various more examples. So I think I did some justice on SA 240. So without wasting much time, I think I will go into SA 230 also, and then we will leave it for you to give your comments and all. Now SA 240, which is the next standard which I am expected to augment today, is the key thing. I would say the thing, like what Mr. Ram rightly pointed out. Documentation is everything. Documentation is everything which is going to save you. Like my practice on SA 240, let me not take you through the standard and its para now. SA 230, wherever I handle, wherever seminar I handle, the first question or the last question or the only question that is always pointed to me, Sanjeev, tell me what we have to do. Tell me what we have to do as documentation. Today, what I will do is, I will tell you what we can do as audit documentation. And then when I go into the standard, you will observe that that is what it says. Okay. I'm giving a very ideal scenario. You might say, Sanjeev, these things are not possible, X, Y, Z and all. And whatever I'm going to now say is within the four walls of the standards on quality control. And I am taking it as a liberty that all people who are there, most of whom I'm not able to see, are my close people to whom I can connect directly as friends, are people who I see personally as a very close circle to whom I'm saying all this. I would suggest we get into this practice of identifying our entire set of clientele into few categories, say category A, category B, category C, and define categories, say category A portfolio, companies whose turnover is beyond this limit, whose risk is like they say they are listed companies, they are banks, or there are a lot of public shareholding, or there is so much export, import, so many stakeholders. The risk is high there, so many stakeholders are there as category A. Category B, not so much risk, but the transactions are voluminous, so it requires a lot of work, say category B. Category C are companies where it is purely promoter shareholding, no borrowing, very small scale, single line of business, no under many lot of products and all. Simple business, cost plus method, foreign company is there, India is the BPO of that. The foreign company will do service, I will do cost plus billing to him. My cost is straightforward, I have no problem, no outside reporting, fully promote owned company. Category C. Having defined our portfolio as category A, B, and C, then we will do like this. Category A, absolute compliance with the complete standards on auditing, meaning I will prepare something called a planning document where I will say, as required under SA 315, understanding the risk of material misstatement by understanding the entity and its relevant internal controls. I will do a complete study of the company, understand the standard operating procedures, understand what is the way in which the company functions, identify their key areas, identify the individual processes that are involved. I will do everything. Then based on this identification of mine, I will have a preset audit program which says in fixed assets, do this. If in debtors, do this. If in creditors, do this. Now what is this? If it comes fixed assets, for the purpose of testing the existence, which is one of the assertion, for the purpose of testing the recognition, for the purpose of testing the value, and for all this to be in accordance with the accounting standard, I will say do this. Say take the list of additions during the year, see if the fixed asset registers matches, see if there has been a physical verification of fixed assets during the year, see if the cost components are separately identified, meaning I will draft an audit program like this. Then based on my understanding of the entity, I will put some more additional to this, meaning I understand that this company is in a place where the financial asset, fixed assets are leased out. Okay, when it comes to leasing of fixed assets, there are certain other requirements for the concept of, for the purpose of the recognition, measurement, and presentation issues. I will do a verification of that also. I will draft an audit program. Having drafted an audit program like this, what I will do is, I will fix each person responsible for each and every area, and I will say, you will have to do this, you will have to do this. Then I will fix a person who reviews this. In some cases, the partner himself, in some cases, the senior person. Now understand, the program should start from planning, meaning planning means planning. Like it should start from whether the appointment letter is there in the file, whether form ADT1 has been filed, whether an engagement letter is obtained, whether the team has declared its independence to us, whether the preliminary discussion with the team has happened, whether the preliminary discussion with the management has happened, whether the management portfolio has been identified, whether the SA 315 study has been conducted, whether the complete SOP study has been taken, whether the internal financial control has been understood, whether the samples have been taken, whether the materiality level has been fixed. To this extent, you should have a questionnaire kind of thing or a plan. All this will form part in the planning stage. The second part of planning stage is creating the audit program. That audit program will have a standard audit program already existing. Okay, already existing. Then a project specific audit program will be there. Then after planning, what we will have is, we will have area wise property, plant and equipment, debtors, creditors, share capital. Every area in the financial statement, we need to draft an audit program. Very simple. It is very simple to draft an audit program. Simple thing. Take that area, see the relevant accounting standard compliance, see the relevant GST or income tax related compliance, see the auditing standard related compliance, and write do a task kind of structure. You can say task, you can state audit steps, anything. Draft an audit program in this fashion. Like this, you take it through every item in the financial statement. Don't stop with that. Do it for the notes part also, expenditure in foreign currency, then related party disclosure, then contingencies and contingencies related, then subsequent events related. Draft an audit program in this very detailed manner once in your lifetime, only once in your lifetime, for all your A category audits. Only once. In due process, you would have read everything. In this process, you can create a template of audit engagement letter. You can create a template of say engagement letters. You can create template of how the meeting minutes should look. You can create templates of how this SA 315 document should look. One time, only one time exercise that you have to do. Fixed timelines, like say on commencement of audit, within the first 3 days, all these areas have to be completed and reviewed. Then within the next 6 days, all these areas are required to be completed and reviewed. Then for property, plant and equipment, this step has to happen. Team has to, talk to them. Team has to go through the plan, see if what is relevant to the audit, mark others not applicable. Whatever is relevant to the audit, do those activities, get those evidences, place necessary evidences in the file, do the audit, get the comfort. Now, then in your audit program, go further, include the completion part without fail. The completion part is prepare all the checklists, SA checklist, AS checklist, Companies Act checklist, CARO checklist, SQC checklist, GST checklist, income tax checklist, tax audit checklist, this checklist, that checklist. Prepare every checklist, obtain the management representation letter, see if all the above program items are signed off, see if all the necessary evidences are being obtained, see if everything is closed, see if if there is an internal quality review that is there, see whether the internal quality review has happened, see whether the hard copy files that have gone out of the company have come inside, see whether the hard copy files of this year have been prepared properly, see whether they have been indexed and page numbered properly. Prepare a audit program primarily this fashion. There is a problem most of you will know. If you fail to plan, you are planning to fail. Understand, drafting this kind of a detailed audit program one time in your life might take 1 month or 1.5 months, depending on the kind of environment in which you are working and kind of technology that you people have. Will have one time work, but if you do it, that is going to save you for life. Category A like this. Category B can be slightly reduced. Say if category A, I in an organization have did this exercise, and we observed that for an Ind-AS audit, roughly 650 line items will come. Okay, for an AS audit, roughly 450 audits will come, line items will come. This is for category A. Then do this for category B. You decide that category B, this much intensity is not needed. We will remove certain things. Then for category C, most of it is not needed. We'll remove others. This is the first activity that I would expect all of you to do, to identify your clientele and your risk assessment in those clientele in this fashion, so that you now have a rope on which your team has to walk. Your team should not go outside this rope. They can with the prior approval of the engagement manager or the engagement partner, and they need to, if there is a change, necessary changes in the audit program has to happen, and necessary revision in the kind of evidences should be taken. Now draft a program like this, make everyone work. I am telling you with my experience, the audit which we were doing without an environment like this was earlier taking 45 days. Today it is taking 50 to 55 days. Okay, it is taking 10 additional days. No. But the advantage that you will have is, at the time of completion of audit, you will be assured that your team has seen every possible area in the audit, every necessary evidences have been obtained, whatever documentations have to be closed has already been closed, and everything is there in file. Meaning, within these four walls, within this not wall, our wall is now extended to this whole country, but still within this, I think I have 80, 90 or 100 members, something who are listening. All of us will definitely accept, including us, we will accept that the only time we will go back seeing our file is when peer review happens. At the time of peer review, we'll run to the file and see this is not that, that is not that, come, let us do this, let us do that, we'll make our attempt. Ultimately, we will not cheat the peer reviewer, we will not do some things, we will do some things. Some more these things have been going on. But if you have a tight rope like this, where you have a plan not only to do the audit, remember, not only to do an audit, but also to get documentation, like say for cutoff, get the 31st March invoices. For PF, ESI and all statutory payments, get the last month challan. For undisputed tax, get the order copy. For fixed assets, get the addition. For employee, get the contracts, get the representation letter, get the confirmation. If the documentation is also properly charted and your team says, yes, 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 this is done, and your reviewing manager says, yes, 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 this is done, why on earth will you have to go back to your file at the time of peer review? Tell me. You will have everything intact in your file, and you are given 60 days to close your file, meaning after the completion of audit, you have 60 days to revisit these things and see if something has happened. You know, by this, what will happen is you are saved. One more thing I will have to tell you in this before I go into this. My sincere prayer to everyone, my sincere request is to everyone is, please deploy some technology to do this. Please, please deploy some technology to do this. Two very important things will happen. One thing, once done is always done in technology. You will have a technology, a robust environment to do this. Second most important thing, what will happen, it is like forcing yourself. I don't know how many of you, I mean, of course, a lot of you are, I'm very sure you people would have read a lot about this concept of habit, etc., and all. Like habit, some things are like this, like if you want to daily think 3 liters of water, if you think internally that you need to drink 3 liters of water, you won't do. But if you daily catch a 3-liter water bottle like this and place it on your table, the chances of you having completed to drinking it is more. Am I right? Most of you will accept whatever I'm saying. Like say for bad habits, if you want to quit alcohol or quit smoking, people say do one thing. After 6 o'clock, you start having some meetings. You start making some presentations. You go get into some meetings. You become part of some members so that you actually don't have the time to drink. There are some sayings like this. No, in that fashion, when you deploy technology, to do all this, what will happen is your hands are tied. Without doing all this, you cannot close the audit. This is a self-curtailed chain that you're putting around us. More importantly, you can say tomorrow that I did it yesterday while you did it tomorrow. Meaning peer reviewer, you can say, actually I did it when I did the audit by getting the representation letter on the date of peer review. But your technology will not help you. No. Technology will make it fastening on you and your team to complete it on that day, because system automatically has the date. You cannot change the date. You can, but you will not want to. No, you will not want to do a fraud. It gives you, by developing or deploying technology, it gives you an incentive to follow a line. Yes, adapting to technology is very difficult. Personally, making the client to adapt technology is even more difficult. I know all this, it is all difficult, but that is the call of the day. Today in this COVID times, a classic example, if you are in a technology environment, what you can tell the client is, see sir, I may not be able to come there. I cannot risk my staff's life. We will do one thing. In my technology, I will give you a portal to come and upload data. I will put the list of things that you are required to, give me. You please upload the data. It is all live. Okay. What happens? Tomorrow the client cannot say, no, Sanjeev, you did not ask. I gave, you did not see. These humbug and all won't be there. It is all live. I asked this detail, you gave, you didn't give, is something that is so obviously reflecting online. Step 1. Step 2, having received all the data, what now automatically happens? You have received the data, online system is working. You can complete the audit and complete the documentation within the 60 days, throw it aside, archive it and close. So this is the practice that all of us should now start inculcating. Step one, or I would say the only step primarily, is to change an attitude by having a very exhaustive audit program which says how to conduct audit, what is the document you need to hold, what are all the checklists, and in your checklist also remember, let us not have this habit of SA 230 complaint, yes. SA 240 complaint, yes. Not like this, definitely not like this. SA 230, para 1, para 2, para 3, para 4, what is the complaints that they have done, okay? And for the compliance, if necessary, link a respective work paper and keep to say that I have done this complaints. Now you might ask me, Sanjeev, you have gone mad. This is impossible, is something you will say. We'll get back to the original story that I told you an hour and a half before. When you go to this, NAFRA disciplinary committee, as I told you, the question they'll ask is, in chapter 7, para 3, there is a requirement to do this. Have you done this is the question. If assuming your checklist is having that, chapter 7, para 3, you would have written that, yes, I have done this, and this is the work paper towards that. What you can do to disciplinary committee, boss, see this, I have done, and I can show. Assuming no, assuming all you have done is, have I complied with guidance note on audit of banks? If you have written yes, do you really think you will be able to corroborate and go back and say, for this, I had done this? For most of us, what is the lunch we ate yesterday itself is impossible to remember. What we have done 4 years before, do you really think we will be able to remember when the D-day comes, when you are expected to prove it? It is not possible. Please ensure that your documentations are tagged on to the requirements of standards on auditing, requirements of accounting standard, para-wise and not standard-wise. If you do this, first thing, you will become tired. Second thing, you will take more time. Third thing, when you go and talk to your client to increase fees, you have a base to say, boss, see, this is the amount of deployment of technology and this is the amount of documentation that I have to do, and this is what is happening. And in due course of doing all this, there will be a lot of value addition you will be giving to the company. Like in a classic case for one of the companies which we had a chance to do, during the course of all this analysis, we actually came across to identify that the chef in the kitchen of the hotel is stealing. Those who have done hotel audits might know this concept of kitchen order ticket. Okay, once the kitchen order ticket is written, say I need 2 naans and 1 paneer butter masala. The head chef will have people below him to do the work. Okay. What the chef will do is, he will say, this, that, something. There is no record of, for 1 naan, you need 1 cup of maida. For 1 cup of paneer butter masala, you need quarter paneer. This kind of record is not maintained in the hotel industries. The chef, what he was doing is, whenever he gives material for a naan, he will take like this and give, and take like this input. When he gives paneer, he will cut 15 pieces and give 12 pieces and take 2 pieces. This lapse in the environment where if you go to a manufacturing company, a bill of material will be there. If I need to manufacture 1 ton of paper, you will need 2 tons of wood, then 3 liters of chemical. That is a bill of material is there. In a kitchen, there is no concept of bill of material. No, what they have is just a consumption ratio. What can 1 paneer do to the consumption ratio? 1 piece of paneer. But 1 piece of paneer in an entire day can do a lot of things to the chef, right? In that fashion, if you do an in-depth analysis, you'll get to know these things which will be a value addition. Sometimes the company will be happy to even pay you more if he finds that there is a value addition that happens. In any case, even if you don't get a fees, tomorrow when the authorities come to you, you will be in a position to say page-wise, para-wise compliance. You will get a peace of mind that before you are going to sit in the audit committee, your team has seen every damn thing. You will have a comfort that there is no ifs in your mind. What if my team has not seen it? That will not happen. Because you should understand, I think most of you will be in an organization setup where you are there, your manager is there, below your manager, your articles are there. How much ever smart your articles are, I think students are also here. With due respect to all those students, how much ever intelligent we people are, the experience has a place to play here. And when you are in the fire of the heck of the moment, you are expected to miss a certain things, right? Those missing certain things will be taken care by writing an audit program of this sort. When you do these things, you people are rest assured. Now next question you are going to ask me, Sanjeev, ये सब सही है, आपको हमने यहाँ SA 330 के बारे में बात करने के लिए बोला है, please talk about SA 230. I will come to that. Now whatever I have told you thus far as things that you have to do is what SA 230 says. SA 230 in sum and substance says, do everything that you document, everything that you are required to document to enable someone to get a comfort in your audit, enable authorities to get a comfort in your audit. Now, who are authorities? NAFRA, today Disciplinary Committee, RBI, Ministry of Corporate Affairs, CBI, CVC. I have already told you the kind of questions that these people will ask. So which means this is their requirement. Having known that this is their requirement, this is the least required documentation that I am required to maintain. So let us all geared up. And in fact, if you go through audit documentation as a standard, in fact, it doesn't say document this, document that. Mr. Saram will also accept to my views. He gives a single paragraph where he says, you are required to document everything which in the eyes of authorities or any person who comes and sees your documentation gets a satisfaction that you have done the audit. Now the person who comes there, we don't know what is his perception. We don't know what he will expect out of us. Correct? People who are there who have got quality reviews done, people who are there in the quality review board, or who are FRRB practitioners, QRB practitioners, you people definitely know the extent of checklist that they give you to verify the practitioner's account. Correct? Be it peer review or QRB, the checklist that institute has given to you so huge. Whether the firm has an internal quality control mechanism, whether the firm conducts continuous knowledge updation process, whether the company firm has a quality control policy, whether the firm has a documentation policy. Remember, whether the firm has an internal quality reviewer policy, whether the documentation policy matches with the requirement of auditing standard. What does auditing standard say? Is document everything which the external parties needed. So which means what I told as what you are required to do in documentation is what SA 230 also says. Now I told you earlier, right? Categorize as ABC, draft a detailed audit program, fixed timelines, say the kind of checklist, define your work paper, give a work paper structure, are things which are called a documentation policy. Draft a documentation policy depending on the size of your organization. That documentation policy should address all this. Deploy some technology. I'm not saying this technology, that technology, that kind of technology, this kind of technology. Deploy some technology which takes care of this. Have a very nice archival infrastructure. Have a very nice functionality by which you comply with SA 230 at large. That is what SA 230 says. Do all this. Then second part of SA 230 says something called timeline. Timeline to do completion is 60 days, and period of requirement to maintenance of records, which is 7 years. This is what documentation says. This is what is SA 230 is all about. One place SA 230 says, let's not have redundancy of documentation, meaning you have obtained management representation letter. You are not, once you have obtained management representation letter and you mention the fact that you have obtained management representation letter, you are not expected to mention 25 times that you have obtained a management representation letter, meaning once in revenue that you have obtained management, once again in fixed assets that you have obtained in management. It is not like that. Once you have obtained management representation letter, mention in one place you have obtained and hold the document, that is enough. Redundancy of documentation is not, that is something that is expected from you. How can you avoid redundancy? By deploying sufficient technology. This is how it will happen. It will not happen otherwise. So this is what SA 230 is all about. Now I will take you through the presentation, very small presentation, where you will observe this is what it again says. Prepare the audit documentation which enables an experienced auditor with no previous connection with the audit to understand the nature, time, and result of audit procedure, significant matters arising on account of audit, conclusion reached, discussion with those charged with governance. Important documentation apart from regular documentation, any departure from the standards on auditing, alternate audit procedures performed, additional procedures performed, matters forming part of the auditor's report based on the additional audit procedures, reasons and conclusions arrived. Now you can ask me, Sanjay, you didn't tell me this. It is Abdillah. It is not like that. When you go to the respective standards, he will actually say departure from SA should be documented. Departure for any alternate audit procedures in existence of an When the non-existence of an internal control or when a situation arises, you are required to document it separately. You need to document the matters that come into the audit report and the basis for those matters, or that comes in the respective standards itself. SA 230 need not exclusively discuss about that. But in any case, SA 230 says additionally, which does not mean it is a new thing in SA 230. Remember, these are there in the respective standards also. Audit failed assembly, fulfill SQC1 requirements of assembly, complete in all aspects the documentation, introduce checklists, letters of confirmation and representation, audit programs, minutes of the audit team, minutes of the engagement partner meeting, preserve documentation for minimum of 7 years. Other important points: superseded drafts and preliminary work paper not required, meaning don't have 120 drafts in your financial statements, in your documents. Have the final work paper alone. Superseding drafts, preliminary work papers are not needed. Maintenance of a separate file for permanent and current file. Permanent file will include your memorandum of association, articles of association, the permanent lease deeds, appointment letters, then 274(1)(g confirmations, then 50A complaints, 58A complaints. Those kind of documents will go into the permanent audit file. Current file is relating to transactions and account balances of the current year. Documentation of significant points, which is the key audit matter related areas. Minutes of meeting with those charged with governance and engagement partner. Remember, these minutes play a very important role. Most of the auditors, we fail to do these minutes. Then simple documentation of smaller entities allowed by SS. As I told you, every standards on auditing has a leverage for conducting audits of small essays, which I told categorized into ABC. You can tell me, Sanjeev, now you are saying B strict, why are you saying category C? I am not saying I am not saying any of these things. The standards on auditing itself says, in fact, SQC1 will deal in depth regarding this, this concept of dividing your clientele, having multiple clients, creating policies and all. So with this essay, 230 is also over. I really hope I have done justice. I thank the entire Jamshedpur branch of ICAI and the core team which organized this meeting and the entire participants. I'm open for questions. One of the questions that came to me even before I commenced was that to tell on auditors' role in connection with issuing projected, certifying the projected financial statements. To date back into history into this, earlier auditors were prevented from certifying projected financial statements. Of course, I'm saying bit earlier. Now there's a separate standards on SAE 3400, which deals with engagement for providing assurance on projected financial statements. Now you are permitted to sign projected financial statements also. As an auditor, what you are required to do, first, understand why he is asking for a projected financial statement. Whether it is for the bank drawing power purpose, whether it is for the purpose of obtaining new loan, or whether it is for the purpose of identifying investors, or whether it is for the purpose of getting a valuation done, or whether it is for the purpose of defining key performance indicators for the employees, identify the purpose, then get from the management the basis they have taken for the purpose of doing each and every projections, identify whether those bases are reasonable. You cannot do an audit of that because it is without any underlying evidence, but for whatever they say as to be a reason for the projection, whether there are evidences. Say, for a simple example I can give like this, say the company says my next year turnover is going to be say 3,500 crores, and if we ask him how you are arrived at a 3,500 crores, if they say the orders in pipeline are for that extent, we are required to take the pipeline orders, see whether the book, we'll say order book, people know the term order book, is to the extent of 3,500 crores, do a simple assurance of that, and then confirm whether the revenue to the extent of 3,500 crores is correct. Then the profitability and all, we need to see whether their estimate is correct, whether it is briefly matching with the market estimates. When the entire country in COVID, entire hotel industry in COVID is saying next year is doomed, if one hotel is going to say next year I'm going to see a growth of 40%, we'll have to slap in his face and say it is not possible. That is the kind of, that again skepticism, this all comes down to skepticism. Do this, then as usual, if you find something is out of ordinary, report to them, or you can even get yourself outside the engagement, then provide your report. In your report, mention clearly what is your responsibility, their responsibility, and what is it you have done to the financial statement. Express clearly that you have not done an audit. you are not giving an assurance, and we are not giving a reasonable assurance, this, that at all. What you are doing is only certification of the projected financial statement. Ensure you get management representation letter from them. So this is what SAE 3400 at nutshell, a larger level is about. So this was one question that was posted to me. Then now I am open to take any other questions that you people have.
Okay, thank you, Sanjeev. So our first question is from Mr. Sanjay Jain. He wanted to understand, when we are saying that we have to maintain the professional skepticism during the entire audit, are we supposed to have a questioning mind, or are we supposed to have the suspicious mind?
Primarily, you are required to have a questioning mind. Questioning mind at the stage where you are identifying the risk. Okay, meaning when you are getting to risk means when you are discussing with the management and all, you are expected to have a questioning mind, meaning question everything that they say. If they say that, sir, for the next 10 days CFO won't come, don't say, oh, okay, no, okay, let him not come. Question why. At that stage, have a questioning mind. Based on the answers that you are getting, start having a suspicion. Okay, so skepticism is at the point of questioning and ends with the point of suspicion. So primarily have a questioning mind only, always. Based on whatever evidences we are getting and the corroboration that you can do, get into suspicion. Okay, understand? The standard does not allow you to say, I'm not required to be suspicious. Standard in fact says be suspicious of a fraud. So which means our requirement is also to be suspicious. Remember earlier there is always a saying, the chartered accountants are just watchdogs. They are not bloodhounds. Ultimately, we are dogs. Understand? We are required to sneeze. We are required to smell. We are required to identify any problems that are there. So which means have a questioning mind, later convert it into suspicious minds based on the answers we are getting.
Okay.
Yes.
Next question is again from SA 240 from Mr. Pavan Jha. He has given one example. In one of the private company, a person embezzled the company's money, and the company has taken an appropriate step against the culprit and put him behind the bar. The company has appropriately disclosed this information in the board report, and the company has also informed the auditor about this fraud. He want to understand then what is the duty of the auditor here under SA 240.
Yeah, okay. So primarily under SA 240, in fact, your actual work is over. If the management has already identified the fraud and management has accepted to give in the board's report and management has informed you about the fraud, the only additional thing you need to do is, for the fraud to not happen in future, has the company put in the mitigating controls, you are required to identify if the fraud has been identified in depth. Meaning, normally what will happen is they will identify the fraud and say, sir, fraud is only 9 crores. But the fraud actually will be 900 crores. Whether they have identified the fraud absolutely, whether the complete exercise has been done, get to know from the management if they have completed the entire environment, whether if it had warranted a forensic audit, whether they did the forensic audit, whether it needed an internal audit, whether they have done it, whether it needed a management audit, if they have done it, whether they have covered the full facet of that fraud. You need to understand. If everything is covered, then the last thing that you have to do is, in your financial statement, expect the company to give a note, tell them that now that you identify the fraud, it is normal, not a normal event. Please mention it in your audit report. Ideally, give an emphasis of matter. Without fail, report in CARO. Without fail, report in IFC. Without fail, in your management representation letter, ask them to mention this incident specifically and tell them that they have mentioned you this, because tomorrow they should not say, I told you. You should ask from them what is it they tell us. If it is 9 crore, they need to tell you it is 9 crore. They need to tell you these are the actions that are taken. Get a detailed representation letter.
Okay, thank you. The next question is not related to SA, but yeah, one of our participant, Hitesh Kumar Dive, want to understand, is there any low-cost audit documentation software is available?
Pass.
Okay.
Pass. I think, okay. Pass, because I don't know if it is right for me to tell this in public fora. If my memory is right, CA Institute itself has a tie-up with the product. I am not able to recollect the name of the product where it is offering this entire documentation software at a very low price. I think the management team, the branch manager team can help the, what is it, committee for capacity building for small
Build,
and
yeah, yeah,
medium
yeah,
sized.
yeah.
There
The
is,
institute,
instead of
yes,
having a tie-up, if you're asking me, Sanjeev, is that product is nice? Yes, it is nice. We have evaluated the product, it is nice. You can try that product definitely. Or there are so many other products. And now Institute has come out with an RFP where they have asked the various technology companies to bid for this. So this process is also on. So maybe sooner or later you might be getting some more products. But currently, lot of products are there. If you're asking Sanjeev, no, I want your opinion only, then please connect individually to me. Yeah.
okay.
Hmm.
The next question is from Minal. What is the basic checklist for documentation? What are the basic checklists one should maintain in audit for documentation?
Yeah, so based on your category of companies, okay, I will say the headings. Intensity is different. Headings are standards on
Correct.
auditing checklist, then CARO, then IFC checklist, internal financial control checklist, then accounting standard checklist, then you need to have Companies Act compliance checklist mandatorily, then standards on quality control checklist. These 6 are must. Depending on the kind of, like if you're doing an audit of bank, then guidance note of audit of bank related checklist is must. To put it in a better way, have a checklist for all top level legislations you are required to comply. Though for an audit, don't do a PF checklist at all. Primarily for the financial statement, AS is must. For your audit, IFC, SA, SQC is must. Correct. For the governance of the company, Companies Act is must. So like that, these 5 or 6 headlines is must. But ensure you have this checklist. Depending on the specific, like say, if it is income tax audit, don't have IFC checklist, and that doesn't make sense. Have income tax checklist, tax audit checklist. Again, all these are there in the institute guidance one itself. Have a tax audit checklist. GST means have a GST audit checklist. In fact, if you see guidance one on audit of bank, there is checklist there also. In fact, their audit program itself will look like a checklist only.
Okay.
Yes.
Next question is again from Rajesh Jainji, wherein he is accepting that audit program and audit checklists are important, but there is a threat that the audit trainee do the audit in mechanical way and stop having a questioning mind. They simply follow the audit program and check its checklist blindly. So this may deteriorate the quality of the audit. So
I am very happy that this question is asked. Okay, the answer to this is in this angle. Two angles. One angle, by doing all this checklist, what are we doing is we are making our articles mind mechanical. They just very simply follow the checklist. Yes, it might become mechanical. It might definitely become mechanical. There are chances that it may become mechanical by just answering questions. How do I not make it? That is the first thing I will address. How do I not making it? Is by giving them a sense, giving them, saying that boss, this is not a questionnaire, or you need to send the right kind of questionnaires and tell them on this you are expected to think. It is the continuous conversations which you have with them and continuous peace of mind you give to them to say that it is not a checklist, it is a program and you are required to execute by reading the respective legislations. One way of doing it is not writing the legislation there. You can say, check whether the fixer assets, check whether the addition complies with the requirement of composition, componentization as per standard. Then then the article will have to go and read Ind AS 116, Ind AS 16 to know what is componentization. That does not create a mechanical thing there. You are giving him a way where he has to go and read and understand. You get it? You are not saying, you are not putting a question where he writes an yes or no. You are giving him an activity. Remember, your audit program should not be question. It should not be have you. It should be do. Okay, by which he reads and then does. Few things will be yes or no. Have you obtained management representation? It is only yes or no. It is always mechanical. But where you want them to study, have questions like that. Understand? Is the revenue as per GST law reconciled? Which means he should know what is revenue as per GST law and he should know what is revenue here. Don't put the question as reconcile GSTR 1 income and revenue. That is mechanical. You understand? This is one side. The other root of it, sir, with all due respect, it is the engagement partner's duty to save himself. Okay. Expecting our articles to learn is, see, personally, even I am a faculty, I teach a lot of people. My personal interest is definitely to develop my articles, but I cannot keep my certificate at stake by expecting them to think. Okay. What is a normal audit period, sir? 45, 50 days? Any normal, I'm saying a decent size company, you expect him to think, let him do. I will not do him any this checklist bonding, let him think. He does, and you go on the 42nd day and you observe that your team has not done this, your team has not done that, he has not identified this, he has not identified that, he has not taken this on record, if he has not done a lot of things, do you really think you can commence your audit from that point again? Not possible, no? We need to give a proper roadmap to our team. We'll forget all this. I also personally say, when I developed all these things for my organization, I had all these things, questions put forth before me. Sanjeev, what you're doing is you're mechanically making people not think. But rather than making them think or we scolding them on the 43rd day, we are making them think right from day one, by which my 45th day is saved. Okay. One more thing you should understand, we are not gods here for us to think of everything the moment we see a figure. We ourselves need a guiding, right? How many of you, sir, how many of you touch your heart and say, this last year you have signed a balance sheet, this year when you are seeing the audit, we'll get a feeling that we missed it last time. I'm seeing a lot of faces already shaking their heads. Few people not shaking, but they will also accept the fact. How has this happened? Is it because last year you didn't know accounting standard and this year only you know accounting standard? Arey yaar, hum har saal accounting standard jante hain. Just that last time we would not have complained. Now what we are doing here, we are enabling, right? This enabling is to save everyone. As I told you, create an environment in which they learn. At the same time, you are also saved. Okay.
True. There are no more questions, so I would request Secretary Jamshedpur chapter to
we have one question in chat box.
Okay. Okay. This question is from Ayush Kumar Sharma. The company has made its policy to book according to which they do accounting in SAP. But we found some deviation from that policy, but that deviation is allowed in standard. Can it be classified as fraud if it's against the company's accounting manual? I mean, some accounting which they have done, which is not in compliance with the company's own accounting manual.
Correct. So this is a very, very, very nice, very technical point, integrated technical point. So to answer this quickly, SA 315, he says you need to identify, understand the entity by understanding its internal control, which includes the accounting environment. That standard actually gives a reply to us. It says, if the company has a fixed environment and the company has worked outside the environment, you assume that there is a risk, there is an inherent risk because of this. You conduct your audit procedure, okay, and if the outside environment gives you a picture that the people have intentionally gone outside the environment, then you think it as a susceptible to fraud, you consider as a risk of fraud, then do your audit. Because I get this, I'll give an example. What will happen is, in SAP there is a control that for debtors who are aged more than 90 days, they will, the commissions will automatically stop. So what the billing person will do is, to avoid this, what he will do is, he will post the bill inside the SAP itself after 15 days. Okay, or he will create a manual debit credit entry inside the software by which it will think that a receipt has come and the 90 days won't get computed. They'll do some outside mechanism. So standard says you evaluate the outside mechanism. If all said and done, if it is going to give the ultimate output and there are corroborative evidences correctly, then you don't have to think it is a fraud merely because they are maintaining separately. But yes, see it as a risk factor for fraud and deploy appropriate audit procedures. Understood? Don't think it is fraud. Think it is a risk of fraud. Then appropriate audit procedures have to be applied.
Okay. I think all the question has been answered. So I request Sugam to hand over the webinar Over to Sugam. Sugam.
Thank you, Rambia. We have two attendees who have raised their hands, CA Rajesh Agarwal and CA Sarika Sindhodia. I have unmuted Rajesh Agarwal, sir. If you want to ask something, please go ahead.
Sumagi, it was done by mistake.
Okay, sir. Okay, thank you.
It was done by mistake.
Your voice is breaking, Sugam. I'm not able to hear you.
Am I audible?
Yeah, better now. Yeah.
Yeah. So I think we have done with the questions. So I would like to extend my thanks to the speaker and the moderator for such a wonderful session. And for the formal vote of thanks, I would request our branch treasurer, CA Siddharth Khandelwal, to deliver the vote of thanks. Over to you, Siddharth.
Thank you, Sugam. A warm and graceful evening to all. It's my privilege to have been asked to propose a vote of thanks on this occasion. I, CA Siddharth Khandelwal, on behalf of the Managing Committee and members of the Jamshedpur branch, first of all, extend my most sincere thanks to Lord Krishna, the Almighty. I extend a very hearty vote of thanks to the Speaker, CA Sanjeev Aditya sir. I also extend my sincere thanks to the convener, CA Ram Gopal Singhal sir. A big thank you to CA Ramakan Gupta Bhaiya, Jamshedpur CA Branch Chairman CA Sanjay Goyal Bhaiya, Vice Chairman CA Vikas Agarwal Bhaiya, Secretary CA Sugam Saraiwala, Sikasa Chairman CA Yogesh Sharma, and other committee members for organizing this wonderful webinar. Once again, I want to state that we are all most grateful to the speaker. We thank you, sir, for being with us this evening, telling us about the importance of standards of auditing. Thanks a lot to all the listeners also. Jai Hind, Jai ICI. Over to Sugam.
Thank you, Siddharth. So now we are signing off from the webinar. Hope to see you again next Saturday with some other topic. Thank you, everyone.
Thank you.
Sugam. Thank you, Sugam. Thank you, Sanjeev. Bye.
Thank you, sir.
Thank you, everyone.
Thank you.
Thank you, sir. Thank you.
Everyone.